does take us to our talk of the tape. The road ahead for stocks in a new Trump administration. Let's bring in our panel to discuss. Liz Young-Thomas is head of investment strategy at SoFi. Anastasia Amoroso, chief investment strategist with iCapital, both here, as you see, at Post 9 with me. Ladies, welcome. It's good to see you. Liz, you surprised by this reaction in any way? I mean, what do you think it means about where stocks are heading from here?
I wouldn't say I'm surprised. I think the timing of it was beneficial, right? We had inauguration. This is first day of new administration on the heels of the 10-year down back closer to 4.5, which we know was sort of that friction point where stocks stopped liking it, and two inflation prints that didn't scare us for the end of 2024. So I think we're coming into this with the momentum intact from a sentiment perspective and the expectation that this is going to be a friendly and pro-growth business environment. And then the domestic focus that I think we all expected has also remained intact. So that's why you're seeing some of the industrials doing really well today, some of the more domestic focused material stocks, things like that. Benefiting from this.
Anastasia, is this about no tariffs principally today? Because the commentary from the street is don't get too complacent for too long about that. Wolf today says our view is still they're going to be big but slow. What matters more, the size of the tariffs or the implementation of them?
I think all of the above. And today, Scott, I think partially the market reaction has to do with no tariff announcement just yet. But I think today is also about this enthusiasm about supporting critical themes for the United States, like artificial intelligence. That's why you see some of the AI baskets do really well. But to come back to the point on tariffs, I agree that we shouldn't completely not care about the tariffs. I think they're coming. I think they're coming. They might be staggered. They might be differentiated. They might be negotiation tactics. But I think one thing that I've been hearing loud and clear from the administration officials is they believe tariffs are the way forward. They don't believe they're going to stoke massive inflation because there might be currency offsets. There might be countries lowering their prices. So I wouldn't get complacent about this yet. And I certainly would expect, if not a universal tariff, but tariffs on China, maybe Europe.
I mean, yeah, everybody's found religion, I guess, on tariffs over the last however many months.
And by the way, it's a revenue offset. As we talk about budget deficits, today we collect something like $76 billion in tariff revenue. If you scale all that up to universal or China tariff, that's $300 or $400 billion in revenue. So that's why people care.
What do you think about the issue as it relates to the market activity today? Like, if we would have gotten an executive order about tariffs yesterday, you think the market would look like this?
No. I think today it's been a relief, right, that we didn't get something stronger than we were expecting. I absolutely agree. Don't be complacent. I would add to that, the last time that we went through this, there were a lot of retaliatory tariffs, and that's what actually drove a lot of the volatility in the market, too. So there could be more announcements that come if and when we decide that we are going to place tariffs on that are more concrete. Then you get this retaliation effect from other countries, and that drives a lot of the issues in markets. So I still think that that is coming. But right now, this momentum is here, and I think the enthusiasm, as Anastasia pointed out, is still intact because we haven't gotten news that has surprised us to the downside. I don't think there's anybody in the market, though, who's expecting that tariffs will disappear, right? I think we still expect that something is going to come. We just were expecting something more painful. You have this offset, I guess, by the view, Anastasia, that you have what many people are calling animal spirits. In the economy, in banking, in deal making. Mary Erdos, J.P. Morgan used those words. Stan Druckenmiller was with Becky on Monday. He talked about animal spirits as well. He said the economy looks very, very strong for at least the next 6 months. I'm sure he doesn't know what the translation of that is for the market, because the risk in all of that is that you do have bond yields going up on the notion of tariffs and more inflation. But does that feeling of animal spirits, this new administration here on full day one, we're going to have many days that look like this as a result of those types of policies and that kind of feeling?
I think that is the feeling today, which is this is an administration with an extremely pro-business stance, almost trying to run the country as you might run a corporation. And, you know, is an administration that also seems to care about thematics, whether it's cryptocurrency, whether it's artificial intelligence, and that plays right into investors' hands right now. But I would broaden this out as well and say, look, coming into the year, we view this market as having solid economic underpinnings, and that's not because of deregulation. That's because of the consumption pattern that's finished the year very strong last year and that's carrying over into this year. But Scott, you add on top of that deregulation for the banking sector. One thing that really was striking to me as I was looking at bank earnings last week is, fine, everybody expects a rebound in capital market activity, but you know what few people expect? A rebound in net interest income. Few people are looking for net interest margins to improve and lending activity to improve. But if those same animal spirits actually stoke lending activity, that's more upside to financials, that's more upside to the economy. And again, the pro-business stance that we're sensing so far, day two, that's what's lifting markets.
Is that